Hi there, this is Chris from Money Hub, and this video looks at credit cards for anyone with bad credit. So plenty of New Zealanders have bad credit. That is a fact of life. There's many reasons why. Usually it's around not paying back a personal loan on time, or a credit card default in the past, or anything like that. Car finance can also cause lots of problems if you haven't properly budgeted for it. And what the purpose of this video is just to go through our guide, which I've linked to down in the description field. And I'm going to talk about what the requirements are for a credit card, what the credit card banks and also credit card issuers and the banks are looking for. Then I'm going to talk about 8 things to do before applying for a new credit card, so you can comfortably make sure you've got the best application going forward. And then I'm going to talk about best credit cards for bad credit. And these are credit cards which you'll see advertised quite a bit, and they've got less requirements, or they're a little bit more friendly to apply for than some of the other bank-led credit cards. But I just want to talk about the pros and cons of those, because certainly a credit card is not always the best solution. So first up, my comment here is what causes bad credit? How does it affect credit card applications? So credit card applications are now very, very strict, and people who issue them are making sure that under this new CCCFA legislation, the laws have changed, so the banks and anyone who gives out credit cards is on the hook should you not be a capable borrower or the right kind of client who can repay, because they can get in trouble. So that's why there's been a lot of cutback now on credit cards, and a lot more forms and stuff required before anyone actually gets them. I want to say up front that I don't think that's a bad thing. I think too many people in New Zealand did have or have had credit cards which completely unaffordable, and that's just caused a whole bunch of debt problems later on. What this now means, though, is that it is harder for everyone else, and so there's more paperwork, there's more back and forth to get it. But I don't think that's a negative thing for anyone who's just not the right person for a credit card in the first place. We always say on Money Hub, for many people, the best credit card is no credit card at all. And we stick by that because it's a fact of life as well, that too many people have credit card debt, and it's a big, big problem in the long term. So credit cards are unsecured debt, and it's really important to keep that in mind, that just because you don't pay it, it is unsecured, but that will certainly affect your credit rating and your credit's history, which means that if you've done that in the past, it may be unsecured, maybe nobody's shown up to repossess anything or called you too much, but it still marks on your credit file, and that causes you problems later on. And so we have said here, if your financial situation is already stretched, then applying for another credit card or a credit card in the first place may make a bad situation worse. And we believe that there's plenty of assistance out there for anyone who's looking for some help. And we've profiled a lot of different debt providers. The Christians Against Poverty. We've got the Ngāi Tangata Microfinance Trust. There's Debt Fix. So have a look at our debt help guide, which I've also linked to down below, because I don't want people to get more credit cards or a credit card when they're in a financial situation, that they don't enjoy being in, because it's not going to help in the short, or it's not going to help in the short term, and it's definitely not going to help in the long term. There's also work and income hardship assistance, so that's also worth keeping in mind. Now, what do credit card applications ask for? So they all require different things, but generally you're going to have to give your name, your date of birth, your number of dependents, IDs, contact details and phone number, etc., etc. But they'll also be looking at your current employment and income. So this is really important. So anyone who's self-employed, unfortunately, even with reasonable credit, is going to have a bit of a hard time. That's what we're hearing, and that's what we understand the situation to be. Whereas those with a structured employment, permanent employment, doesn't need to be high income, it just needs to be regular. That's going to certainly help them, like with any application. And what the bank or what the credit card issuer is looking at is just seeing the frequency of that, how much you earn after tax, and then they're going to also ask, questions about your expenses. And I think that's really, really important because the new legislation makes it very onerous for any provider of debt to make sure you can afford to repay it. So if you do have, ongoing expenses that are quite significant and also cause you some issues sometimes with being able to balance everything out, then that's going to be probably an issue for any assessment. But it's worth you have to be completely honest in every interaction that you make with a credit card application. And so you have to be fully honest and transparent about everything. Otherwise, you'll get into issues later on anyway. But you're probably going to raise more questions because the banks and the issuers are looking for any inconsistencies to deny applications anyway. They'll ask you for any details of savings and investments. That's worth putting in there if you have them. And then essential living costs, you're going to have to list all those. And that's sort of beyond your general expenses and then your discretionary living costs. So basically, they're going to go through your bank statements and do a full look through and make sure and understand, where your money actually is spent. And that's the only way that they can really assess whether or not you're going to be a suitable borrower for them or a suitable client. So 8 things to do before applying for a new credit card when you have bad credit. First thing is make sure you review your credit history. So it's free to do this. Just click on any of these providers down here, also linked in the guide below, and it's also under our debt help. And there's also a guide to credit scores and credit history. You can have a read through and see how this all works. Basically, if you do have a credit problem in the past, you want to make sure that it's properly marked and it's properly filed. It's not overstated or anything like that, or it's not got the wrong dates. So just, understand your credit history, free of charge to do so. Just get in there and, make it understood, because otherwise you could be penalized for something that's not your fault. Second to that, you want to really quantify your employment situation. So they're going to really be focused on your income, and it's essential to make it clear exactly how much you earn. And if you don't have a job or you can't show regular income, it's very unlikely that you're going to be approved for a credit card, just because the banks and the issuers are very, very cautious now. And moving on from there, you have to assess your existing assets and debts, and you need to be very honest with those. If you have personal loans, car finance, and other credit cards, then it's a risk that you won't be able to make any more repayments for a new credit card. So that's likely to be a problem for any application. So just be aware, this is why credit card applications get declined, because either you don't have enough income to realistically pay it, or you have too much debt already. It's unfortunate, but that's why I'm saying it's really good to work with one of these charitable, organizations who will help, and they will push towards getting you debt free. Of course, it takes a lot of willpower, a lot of sacrifice, but that's the only way to really rebuild, because within New Zealand, it's a really weird situation that once you're in this kind of debt trap with credit cards and a personal loan, car finance or something like that, a store card, it's really hard to get out of. It's just the costs are too high, the wage growth is not there, and it's just a big, big problem. So want to raise that assessing your existing assets and debts is really important anyway. And I'm going to say, please get help if you can, if you want to, because that is just going to put you in a much better position. People carry around these debts for years, and it's just such a waste of money because you've got to pay interest the whole way through it. It's just awful. Now, if you've been rejected for a credit card recently, we're suggesting that you don't apply for one right now. Wait a few months and check your history, as I previously said up above, because everyone needs to be a responsible lender. So if you're going around different places applying, it's just going to be, they'll be able to see that because that's filed in your history. And they'll just say, well, why is this person always applying for credit cards? Or why have they applied for 2 over the last 2 months? This is a problem. We probably don't want them. So, we don't want them as a client. So just be wary of that. And then if you are rebuilding your credit history, please make sure, I know it's going to be really hard, this is why I dislike credit cards overall, to make payments that are in full. but you at least have to make the minimum repayment. And we've got a guide there which talks about, which banks charge what for the minimum repayment. And it's really important that you understand it, because these always have to be made, but otherwise it falls into collections and it becomes a credit problem yet over again. All over again. Second to that, check you actually need a credit card. Many people don't, and we're always going to argue that credit cards are just such a bad idea for so many people. But, please do some, self-reflection there and see if you can actually survive without it. Because if you have bad credit, there is a risk you're going to struggle to get one. And if you do get one, it's going to be expensive. Second to that, never make cash withdrawals on a credit card unless it's some super emergency, you're overseas or something. There's absolutely, you need that money. Otherwise, it's just a higher interest rate, more debt to repay, and expensive. You don't get any interest-free days on it. You have to pay interest from the minute that you withdraw it, and the interest rates are up to about 25%, which means if you withdraw $500 and it takes you 1 year to repay it, not only do you have to pay that $500 back, but you'd also have to pay around $125 of interest, which is just so expensive to spend your own money. And then if you are struggling to get any of the credit cards we've listed below, then we do suggest that you look at our debt help guide. It's really, really informative. I'm just going to sort of walk you through it shortly in a sort of brief narrative here. It's got so much information. So many organizations want to help, and we just want people to. We've got, there's Good Shepherd there. There's a Ngāi Tangata, and so many more are there to wish you, to help you. Work through what you have, minimize what you need to repay, and just build a clean slate with some good financial habits. That's ultimately, this is the aim of the whole Money Hub website, is to get people off bad long-term debt. And if you do have a bad history of being able to, or like a checkered history of being able to repay things, we really want people to just not take out any more debt. Now, moving on to the best credit cards for bad credit. We've called them the best credit cards. They're probably more likely to be the ones that are, easier to obtain. And the reason we've listed them there is we certainly don't advocate them. We're certainly not recommending these credit cards, and we're not guaranteeing that you'll be accepted. They just have an easier, from what we've heard in the market, like an easier way to be approved. But that doesn't mean that they're not doing all the checks that everybody else is. So it's very important to realize that, these banks and these organizations follow all the same legislation, all the same guidance from the government, but they are appealing to different market segments. And we're saying, please don't take out a credit card for any urgency. If there's a chance that you can't repay it, because that's when credit cards become really expensive from day one. So we've listed the Westpac Free MasterCard, but I want to really focus on two cards here, the Q MasterCard and the Gem Visa. Both of these run really kind of similarly in the fact that they have the same interest rate. Usually it's just over about 25%. And what you do is you get these free interest periods on certain purchases. So some providers will be like, or some merchants will be like, oh, if you use your Q card or your Q MasterCard, then you'll get 6 months interest free, you'll get 12 months interest free, no repayments. It sounds all very fine, but the problem is that, over those 6 or 12 months, if you don't make any repayments, then it gets to the end of that period and you may owe $2,000, $1,000. Suddenly you're paying the interest on that. And if it's 25%, you're paying, $250 every year for $1,000 worth of stuff. If it's $2,000 worth of stuff, it's $500. And we know how much money both of these companies make, the companies behind them. This is Latitude and this is Hum Group, or formerly known as Flexi Group. And they're very, very profitable. And a lot of it is driven by these interest costs. And we hear so many stories about people who are paying, maybe they have a $5,000 balance with the Gem Visa or a Q MasterCard, and the interest rate's 25%, and they write in and they say, we make payments every month. We can never get this balance down. It's just a big cost. And every year, They may be working and earning $60,000, $70,000 per year, but every year they're paying, $2,000 of fees on these, or interest and fees and minimum repayments and some overpayments and that for their gym Visa or their Q MasterCard, and it just never goes down. So these cards are very widely marketed. Are widely marketed to people struggling, but we want to make it clear that they are pretty much a big problem if you can't repay them. The interest rates are so high. So this is the summary of our guide to bad credit cards, credit cards for anyone with bad credit. The answer is that it's probably not going to be a solution. Like a credit card probably isn't going to be a solution. We really think that it's talking to microfinance companies and microfinance debt charity organizations to really help, change habits, because we just want people to not be in these spirals of debt and, paying interest to somebody else for, years and years and years. There's so much money in it. The companies that lend make a lot of money, and we don't want you to be paying for that. That's just so unfair. So thanks for watching. If you have any questions, please let us know in the comments below. We're highly responsive. We want to make sure that the guides are as super helpful. We want them to make them as comprehensive as possible. So we'll certainly reply to anything that you write, and hopefully improve our guides as we go and put out more resources that are asked for. Thanks very much, and best wishes for any application that you're making. But also, please do consider reaching out to some of the charitable organizations which will help you with your debt. Thank you.